Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, June 14th, Wednesday, big day today. We are starting with NBA 30-year mortgage that it's coming slightly lower due to the cool down of the interest rate, 6.76, a little bit lower than the 6.81. That means that more applications are coming in due to the lower interest rates for the 30-year, 7.2%, and the previous one was in the negative. Refinance, 434, slightly higher. Users are actually trying to refinance and they leave the market index a little bit higher and the purchase index also a little bit higher. PPI month over month came in the negative. We were expecting minus 0.1 coming from positive 0.2, but we were lower than expected, and core PPI month over month also flat as expected. The core PPI is also coming way lower than expected, still in the positive, and PPI year over year general producer is 1.1 lower than expected. So everything in the PPI is lower than expected. Month over month is negative. That's frankly quite good. But remember yesterday's CPI that core inflation was going higher. Core PPI year over year and month over month and are still going up as expected, mostly, but at least they are aligned with the CPI, and this month over month is actually quite optimistic. But the big news of the day is the Fed interest rate decisions that they didn't raise interest rates as expected. More than 95% of analysts on the Fed Watch tool were expecting no hike, and we remain at 5.25 without any hike. But the big talk today is the economic projections. So the Fed read in this article of the CNBC I think they do quite a nice job with a summary, because the surprising aspect came with a dot plot that I'm going to analyze in a few minutes. But first, most of the Feds are saying with the dot plot and also in the FOMC meeting, they are saying that they think that this is not the final rate and more than one more hike is coming. Actually, Jerome Powell said that 2 more hikes are coming later this year. So they are not pausing, they are skipping this meeting to decide. So they are not deciding on a hike, but they will do later down the road because they are willing to wait for the economy to really digest all these high interest rates and continue seeing data from the economic data month after month. So this is quite surprising because this is not a hawkish pause. This is just a skip and to wait and see, skip on this meeting. But be careful because expectations down the road for this year are really bad, and I think markets are not prepared for that. They were willing to think, markets are willing to think that there will be no more hikes, and this is just the beginning of the start of the downtrend on the decrease on the interest rates. But I mean, this is a check of reality. This is the Fed dot, and as you can see, for 2023 we are seeing 1, 2, 3, 4, 5, 6, 7, 8, and 9 Feds with 5.5. One or mostly 2 or 3 are above 5.75 and 6% for this year. Wow. So we are actually down here. So between these 2 dots and these 4 dots. So a lot of people think that in 2023 they need to raise again. So this is contrarian to the expectations from the market. As always, markets were ahead of themselves. And we are seeing a little bit of correction today, not as I was expecting. We will see the charts later on, but look at this Fed dot plot. A lot of Feds are willing to continue raising rates this year. For 2024, basically from 5.5 to 4.5, so 100 basis points, 1 full point for 1 year is quite acceptable. And then we just scatter about all these levels until the 2% in the long term 2025 plus. So this is key. This is key to understand really what happened today. And what happened today is that Nasdaq and overall markets really didn't like what they got. This is the moment in which FOMC started, and we took out this pivot low. We bounced off yesterday's low. If we check the 30-minute chart, we got this yesterday's low choppy price action, and then for today we were expecting this skip. We got the skip, but the economic projections, I don't think they are good. So basically we did a full rotation from prior lows, from yesterday's lows to today's highs at these levels. We rejected high of day, but I mean, this zone, all this move is quite surprising. Quite surprising. I don't think some players are willing to really let the market drop. Remember that we got yesterday CPI, today we got PPI and FOMC interest rate decisions and economic projections, but there's still 5 million options expiring on Friday in the quadruple witching day. So I don't think markets will be able to do what they want to do in terms of fundamentals, because this week is volatile to the extremes. So we are seeing these huge rotations with, honestly, bad news, because when markets don't get what they want, and they didn't get what they wanted, because economic projections mean that 1 or 2 more rate hikes this year is not what markets were expecting. When they don't get what they want, you can be sure that they will be falling off the cliff. But they are not doing that yet. I think some big players and some basically hedge funds, big institutions, things like that, have big stakes, huge stakes in this quadruple witching day. So I don't expect markets to really sell off this week. But honestly, I think after next week and the upcoming weeks, I really think Nasdaq is really ready to really capitulate to the downside. At least for a nice pullback to really digest a little bit of news and basically start getting all these mean reversions, all these moving averages to a healthy levels, and correct a little bit, because it's still super overextended on every single stock of the Nasdaq. They were quite mixed today. Almost everything was flat. Nasdaq is 0.70, but look at this. Apple is 0.002. Microsoft is 0.07. Tesla is in the red, barely the red, filling the gap, by the way. Look at this gap fill. Amazon in the red, basically flat. Google flat. Nvidia 0.31. Look at this one. Oh, holy moly. Look at this after hours. Big push. So it's 4.81, sorry. So basically they are like, I don't think markets did a good job on going higher nor going lower. So they are basically chopping around in between today's levels, pre-market low and high of day. They range bound, same as yesterday, and we already have quite a decent amount of news to really see a big change on the trend. Not for the bears, to really short the market, but I think we might expect some kind of pullback. Not this week, as I mentioned, because options experiences, but I think in the coming weeks, we might see this kind of move at some point and maybe take this low into the trend and holding 14,300, things like that. That would still be bullish. But with today's news and all the inflation data, I don't think it might happen, but I don't think we are going to continue higher just because yes. I don't think so. Dollar is really seeing it was seeing, look at this sell-off. It saw a lot of weakness on the daily. You can see really the sell-off, a little bit of buyers after the projections, but I don't think we are seeing a big rotation into the dollar. And we are not seeing either a big rotation into any of the defensives, utilities in the red, staples a little bit hanging there, and healthcare is minus 1%. So it's just, we just need time to digest these economic projections. And don't forget about what I mentioned. This week is really, really important in terms of options, and I don't think markets are able to trade freely because of this huge quadruple witching day. So until next week, I mean, trade your own risk, but be really careful, because even though I think today's news was a shock to the markets, we are not seeing that shock. And that's most probably due to options manipulations and all that kind of stuff that you already know. So that's for now my analysis. Tomorrow I will digest a little bit more all these projections and perhaps do some kind of digging on the speech and the conference. But I really think markets are not happy with what they heard from Jerome Powell and from the Feds, because they were expecting a pause, a real pause, and from now until the end of the year just start cutting rate. But it is not what they got. December interest rates are continuing higher. Look at this trend. They are higher and higher and higher. 5.21. So basically the same as right now. They don't trust the Fed yet, because Fed are willing to push 5.50. So maybe one or two more 25 basis points hike this year. In order for markets to trust the Fed, they will be like here, 5.5, 5.6, and things like that. So this level is actually in play for the upcoming months. Let me just do that, because I think up here, if markets are starting to trust the Fed and they are seeing that inflation is not really going down, we might see these yields, these interest rates continuing higher, and that would shock the stock market. Not for now, but be really careful in the upcoming weeks, because things are already starting to tumble. And that's all from my side. As always, thank you for your time. If you found this video useful, please support the channel, give it a like. Thank you for that, and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always, and I hope you had a good trading day. We got yesterday and today a little bit of choppiness, but I think markets are starting to think twice about going nuts to the upside. So maybe that's your opportunity to really look for those other stocks that are undervalued and really let this Nasdaq rest and the overall market just pull back to find better deals. And that's all. Remember that discipline, patience, risk management, all those skills are really key for your success on this market and for day trading. Thank you for that, and stay safe everyone, and see you tomorrow.